Welcome, everyone. Today, we're doing a deep dive into Hyperliquid. It's a decentralized exchange focused on derivatives, and it's been generating some buzz.
Yeah, definitely.
We've pulled together quite a bit of material, their own docs, some analysis from Binance Square, a review from BitDegree, Coin68 coverage too.
The good mix.
Our mission today, go beyond just describing it. We want to really analyze Hyperliquid, assess where it stands, maybe figure out its potential, its future direction in DeFi.
Sounds good. Where should we start? The foundation.
Yeah, let's unpack that. What makes Hyperliquid tick at its core?
Well, the really striking thing is they built their own layer 1 blockchain, the Hyperliquid L1.
Their own L1, not building on like Arbitrum or Optimism.
Nope. From scratch. The docs say it's all about creating this fully on-chain open financial system. That's a pretty ambitious goal.
It really is.
Right.
Building your own L1, that implies they're going for serious optimization, right?
Exactly. They use something called HyperBFT for consensus. It's inspired by Hot Stuff, which people might know is pretty efficient.
Hot Stuff, right? Known for speed. So how did Hyperliquid tweak it? What's the advantage?
Well, HyperBFT is tuned specifically for trading. High throughput, low latency. Hot Stuff's leader-based approach helps streamline things, and Hyperliquid seems to have pushed that further.
Pushed it how far? Are there numbers?
They're claiming 200,000 orders per second. That's the claim for Hypercore with one block finality.
200,000. Okay, that's fast. Significantly faster than many other DXs, for sure.
Mm-hmm.
That kind of speed really could be a game changer for on-chain trading strats.
Yeah, it opens doors.
Yeah.
And that speed comes from Hypercore, which handles the perpetual futures and the spot order books directly on-chain.
Okay, Hypercore for the trading engine. And then there's HyperEVM. What's that piece?
Think of Hypercore as the specialized race car engine, just built for speed. HyperEVM is more like the versatile chassis and operating system built around it.
Oh, okay.
It's EVM compatible, which is key. Developers used to Ethereum can theoretically bring their smart contracts over relatively easily.
So the smart contracts on HyperEVM can interact with the trading stuff in Hypercore.
Precisely. They can tap into that liquidity and those financial primitives within Hypercore. It allows for building more complex DeFi apps right on top of their fast infrastructure.
So it's not just an exchange, it's a platform. Binance Square mentioned they launched back in 2022, aiming to bridge CeFi and DeFi with this speed and the on-chain order books.
Exactly. And they support a decent range of perps, BTC, ETH, AVAX, SOL, SUI, the big ones.
That on-chain order book for perpetuals, that's a major point, isn't it? BitDegree really highlighted that.
It is. Most DXs use AMMs, automated market makers, which work, but Hyperliquid went for a traditional order book.
More like a CEX experience, but decentralized.
That seems to be the goal. More transparency, real-time matching using price-time priority, just like traditional exchanges.
Makes sense. And how do they keep it fair? Margin management, price feeds?
They have a clearinghouse managing margin cross and isolated are supported, and a decentralized Oracle system. This is important.
How does the Oracle work?
It pulls spot prices from major exchanges and updates every 3 seconds.
3 seconds, that's pretty rapid.
Yeah, the idea is to make it much harder to manipulate prices for liquidations or unfair trades. More data points, updated quickly, means a more robust price.
Got it. And they offer a lot of order types too, right? Not just market and limit.
Oh yeah, market limit, stop market, start limit, scale orders, TW, plus options like reduce only, GTC, IOC, TPSL. It caters to more sophisticated traders.
Okay, let's talk about these vaults. BitDegree called them community-owned liquidity pools. Sounds intriguing. How do they actually work?
So the vaults are basically a way for users to pool funds and follow specific trading strategies run by others, or even by the protocol itself.
So I don't have to trade myself, I can just deposit into a vault.
Exactly. You can deposit into user-created vaults run by individual strategy managers or into the main protocol-owned one, the HLP Hyperliquid Provider Vault.
HLP, what does that one do?
The HLP vault is pretty central. It acts as a market maker, provides liquidity, and also participates in liquidations. It earns a share of trading fees for doing this.
And the user vaults. If I deposit in one run by some trader and they make money,
you share the profits. Binance Square mentioned the vault leaders get 10% of the profits they generate for the depositors. That's a pretty decent incentive for good traders to run vaults.
Yeah, definitely. Are there lockups?
Yes, short ones. 1 day for the user vaults, 4 days for the HLP vault. just to maintain some stability, prevent constant inflows and outflows messing with strategies.
Okay, that seems reasonable. It encourages a community approach to liquidity.
For sure. And they've moved beyond just perpetuals, too. They're spot trading now.
Right, spot trading.
Yep.
With tokens like PUR, using their own standard, HIP1.
Yeah, HIP1 is their native token standard for the L1 spot order books. It basically defines how tokens work there and helps bridge assets from other chains.
And HIP2.
HIP2 is about committed liquidity for those HIP1 spot pairs. So ensuring there's enough depth in the order books for efficient trading.
Makes sense. They need liquidity for spot, just like for perps, and that PUR airdrop was tied to this.
Yeah, it seems like it was a way to reward existing users, people who had traded or used vaults and bootstrap activity around their new spot market and token standards.
Interesting. Now, what about Hyper.fun, the Telegram bot for meme coins? That feels different.
It does seem a bit tangential, right? But maybe it's a strategic play to tap into that, very active meme coin community.
A user acquisition play, perhaps.
Could be. Or just experimenting. They use a bonding curve model in auctions for the coin names, which they claim reduces rug pull risks. It's an interesting little side project, at least.
Okay, let's pivot to the HYPE token itself.
Yeah.
The native crypto for the Hyperliquid chain. What's its role?
It's pretty crucial. Used for governance eventually, staking for network security via proof of stake, and paying for more advanced transactions within the Hyper EVM side of things.
Got it. Binance Square laid out the supply, 1 billion total, and the distribution. Looked like a lot went to the community.
Yeah, a very significant chunk was allocated to the airdrop and community initiatives. Plus, the core contributor tokens have vesting schedules.
Which is good practice.
Yeah.
The lines incentives.
Exactly. It signals they want broad ownership and participation, not just a team-held project. That community focus can be really powerful for growth.
And CoinLedger covered that big HYPE airdrop back in October 2024. Sounds like it reached a lot of users.
Over 94,000 users got tokens, apparently. Around 270 million HYPE distributed. It definitely aimed to boost liquidity and reward early adopters. And yeah, it hit a pretty significant market cap quickly after.
But they also noted staking rewards are low right now.
Yeah, that's a point. It suggests that maybe the main driver for holding HYPE currently is less about passive income from staking and more about speculation or potential future utility and governance or the ecosystem. That could change, of course.
Right. Zooming out again, Coin68 emphasized the L1 itself, built with Cosmos' Tendermint, optimized for trading, claiming high TPS. How does that compare to, say, Ethereum or Solana?
Well, the key difference is specialization. Ethereum is general purpose, designed for everything, which can lead to congestion, high fees sometimes. Hyperliquid L1 is purpose-built for trading.
So like a specialized tool versus a Swiss Army knife.
Kinda, yeah. By focusing just on trading mechanics, they can engineer it for much higher throughput and lower latency specifically for those actions, compared to a chain trying to do everything.
And their roadmap seems like a careful progression.
It does. Testing on Arbitrum first as a proof of concept, then launching their own L1, then adding vaults. It suggests an iterative, risk-managed approach.
The team Hyperliquid Labs' Jeff Yan, AlienSync, Harvard backgrounds, tech and finance experience, and self-funded.
Yeah, being self-funded is interesting. It gives them independence. They don't necessarily have VCs breathing down their necks, dictating short-term moves. Allows for potentially a more long-term vision. They do have partnerships, though. Rage Trade, Mazar, Hummingbot mentioned.
Okay, now we need to talk about the elephant in the room. The market events, Coin68 reported. That big whale incident in March 2025.
Right. The large ETH long position that apparently caused about $4 million in losses for the HLP vault. And the HYPE token dropped like 8.5%.
Yeah, that's significant. And there was speculation it was deliberate manipulation of the liquidation system.
That was the chatter. Hard to prove definitively, of course, but it definitely highlighted the risks involved, especially with high leverage on these platforms. It showed how one large player could potentially impact the system, or at least raise questions about its robustness under stress.
How did Hyperliquid respond?
Their immediate reaction was to lower the maximum leverage limits for BTC and ETH, down to 40x and 25x respectively.
A risk mitigation measure. Seems sensible.
It's a direct way to limit the potential size of positions that could cause systemic risk. It might put off some degen traders wanting max leverage, but probably makes the platform more stable overall. And importantly, even with that loss, the HLP vault apparently remained profitable overall, suggesting some underlying resilience.
But the story didn't end there, right? The same whale came back.
Yeah, it took a large short position on BTC, high leverage again. The community apparently even tried to coordinate to liquidate them.
A counterattack. Did it work?
No, the whale kept adding margin and eventually closed the short position for a significant profit, plus collected substantial funding fees along the way.
Wow. So these events really put the spotlight on risk management and platform stability.
Absolutely. It's a learning curve for everyone involved, the team, the users. It underscores the need for constant vigilance, robust tools, and potentially further adapting the platform's parameters as they see how things play out in the real world.
Okay, so let's try and synthesize all this. Based on everything we discussed from the sources, what are the standout strengths of Hyperliquid?
Well, the speed is obviously a huge one. 200K orders per second claim is massive. Low fees, that's always attractive. The advanced trading options, the perps, the spot, the vaults, that's a comprehensive offering.
The vaults seem unique, that community liquidity angle.
Definitely. And the on-chain order book and Oracle system offer transparency. Having their own optimized L1 is a core strength. And the HYPE airdrop did a good job seeding the community.
Right. On the flip side, what are the weaknesses or potential hurdles?
Well, as BitDegree pointed out, it's still relatively centralized validator-wise compared to older, bigger L1s. That's something to watch.
And the withdrawal situation, mostly USDC.
Yeah, reliance on USDC withdrawals could be limiting for some. Bridging relies on Arbitrum primarily, though direct deposits are mentioned. And just generally, it's a newer blockchain. It hasn't been, battle tested over years like some others.
And complexity. Maybe not for beginners.
Could be.
Yeah.
It offers advanced features, which might be overwhelming initially. These are the things they'll likely need to address or refine as they grow.
So, putting it all together, what's the future outlook? What's your assessment of their potential?
Look, Hyperliquid has serious potential, especially for traders who value that CEX-like order book experience but want it decentralized and fast. They could really carve out a niche there.
A lot depends on the ecosystem developing around Hyper-EVM too, right?
Absolutely. Growing the ecosystem, making HYPE genuinely useful for governance and incentives, that'll be key. And critically, demonstrating ongoing platform stability and effective risk management, especially after those whale incidents.
They need to build that track record.
Exactly. The competition is fierce, both from CEXs and other DXs. They need to prove they're not just fast, but also secure and reliable long-term.
So wrapping up, Hyperliquid innovative, fast, community-focused with its custom L1 and features like vaults, but it's still relatively new, facing challenges around decentralization, user experience for some, and proving long-term resilience.
Yeah, and the big question looking ahead is really about that specialization. Will focusing just on being the best, fastest on-chain trading platform be enough to win significant market share in the long run? Or will the general purpose chains eventually catch up or offer compelling alternatives?
How will that community model with vaults and HYPE evolve? Will it create a strong enough moat? And can they navigate the inherent risks of being a young blockchain in this volatile market? Lots to watch.
Definitely.
For those of you listening who want to dig deeper, check out the Hyperliquid documentation, their community channels, and keep an eye on their development. Thanks for tuning into this deep dive.